Hello, and welcome to this fascinating webinar on the recently launched ACT Guide to the First 100 Days as a Treasurer, supported with the help of Deutsche Bank. We have a great lineup today, but before we start, we'll just have a little look at some housekeeping, please. So, if you look at your interactive widgets, you can see that there are a number of buttons you can press, and in particular, I'd like to highlight the Q&A button and also the feedback request at the bottom of this slide. So do familiarize yourself and do put through questions as we go through the presentation. I'd like in a moment to introduce my colleagues on the panel today. As you can see, we've got a great lineup and they will introduce themselves in just a moment. But we're here today to talk about the first 100 days, the ACT's guide to the first 100 days as a treasurer. And you can see an image on the screen, hopefully now, that's of the booklet, which is in a print and PDF form. And you can see where you can download that guide. So that's just to make sure that you know how to access it. But without further ado, I'm going to ask each of my panelists to say a little word about their background, their current role, and why they think the guide is an important document in the Treasurer's toolkit. So if I could start with Frank, please.
Good day from my side. This is Frank Wächter speaking. I'm working with Puma, #3 sports manufacturer and sportswear company in the world, with a history dating back into 1948. I'm responsible for all treasury and insurance topics within the Puma Group, and I'm an active member in the German Treasury Association, and supported, just as a recent example, one initiative, the so-called Summer School, where the association hosted in Frankfurt School of Finance a couple of master students to get them familiar with the job profile of a treasurer. And that is bringing me to your second question, Caroline. Why is this an important document for me? I have to first congratulate Claudia and Caroline, who were the main persons behind this document, because what has been brought on the table here is really amazing, and a very, very good guide into that. And for me, it shows that, first of all, the senior treasurer's role is a rewarding and interesting one. You can see the spectrum over there. To fulfill this role, you need to have a relatively wide view and, of course, good network, which you can find in the ACT, in treasurers' organizations, or in other networks. And that should help the newbie in this role to survive and not to panic. That's it from my side for the first question. Thank you.
Thanks very much, Frank. I'll just turn to Simon now to introduce yourself, please.
Yeah, sure. Thanks, Caroline. My name's Simon Neville. I'm the Group Treasurer of Reckitt Benckiser, which is a consumer goods company. Brands that you may have heard of: Dettol, Finish, Calgon, Nurofen, so I'll put a plug there. My background is in accounting, and I kind of became a treasurer almost accidentally a long time ago now, when I was asked to form a new operational treasury function for Sainsbury's. And I wish, frankly, one of these guides had been around at that stage, because I really probably didn't have much of a clue what I was doing, but I also realized it was a relatively new profession at that time, and therefore you kind of made it up as you go along. So this guide is very helpful.
Thanks, Simon. I'll just turn to Claudia now for her introductions.
Thank you, Caroline. I am a director in cash management structuring at Deutsche Bank. The structuring team are the treasury advisors of the bank. Our job is to be well informed about the latest trends, challenges, and technologies in treasury, to then be able to advise our clients on best practices. This role is very suitable for me, as structuring tries to speak the language of the client. And I had been a treasury practitioner myself until 1 year ago. So before joining Deutsche Bank, I worked for about 15 years in the finance function in the Treasury department of large MNCs. And well, we know each other from, I am the ambassador of the Association of Corporate Treasurers in Singapore. Thank you.
Thanks, Claudia. And just from the bank's point of view, and your personal point of view, of course, as well, why did you think to approach the ACT with this project, and why you felt it's important at this time?
Well, when I joined the bank last year, some of my first engagement was to coach new treasurers. So I was lucky to be working with some senior managers that had just joined the function. Some of them were not from a treasury background. They were sometimes accountants, auditors, or even bankers. And as I had just recently joined Deutsche Bank, I realized that even if we work with the same stuff, we don't necessarily have the same vocabulary. We refer to different things when we are talking. So when I was talking to my clients, they were looking for ideas on how to start, how to prioritize, how to evaluate what needed to be done, which changes were urgent, what their agenda should be. And we realized that some of these clients, even on these conversations, they were shy to ask some of the basic questions. And we did some research in the market, and we saw that there was a big gap. There was not such a document that treasurers could refer to. And that's when we decided to approach a recognized training body to help us fill this gap. So and I must say I'm very proud of this, of the achievement. Yeah.
Oh, and you do right to be proud. It was great. It's almost, I think maybe serendipitous is the right word, because at the ACT, we've been looking at the very same question. We've been analysing the treasurers out there in terms of different personas, and we had identified what we sometimes call the accidental treasurer, the treasurer who suddenly finds they're in a treasury role but hadn't necessarily planned it. And we were thinking, how can we help that particular group? So it was perfect timing from both sides. And as you say, we hope to fill a gap. So just then moving back to our treasurers on the line, if I could ask Frank, first of all, to thank you both for the various nuggets of advice and information you provided for the publication. And for those reading through it, you'll see that a number of treasurers have given their thoughts on their first 100 days or looking back, how they reflect on their career in Treasury. So just turning, as I say, to, first of all, I'll start with Frank. Why would you, from a treasurer's perspective, see this as an important document?
Well, we already talked about these accidental treasurers, and I have to admit I'm also one of these individuals getting in accidentally. I came in from a consulting perspective, which was at that time for corporate treasury a relatively young one, and then they took bankers to get into that, to form a corporate treasury consulting practice. So that's why I get into that. And this was also the driver of this summer school I mentioned already before for the German Treasurers Association, where we recognize that there are only quite limited possibilities for a university education of young people or other possibilities of education for these people. And when these people and when these individuals progress in their career, and getting senior treasurers, they also lack often possibilities for professional association. And this guide, and that's why I think this is an important one, provides you an easy to read 64-page document, which giving really a comprehensive pre-read about what senior treasurer is dealing with and what makes our profession nice and a good choice as a profession, at least for me.
Indeed. Well, very well put, Frank. Simon, why would you see it as an important document?
I think for similar reasons, actually, to those Frank outlined. I mean, I mentioned earlier, I was also a sort of an accidental treasurer where I moved from an accounting discipline, albeit looking at cash flows, into treasury. And I think this gives a good framework. I think it gives the key topic areas that you need to go through. It's, it is concise. It's a good checklist. But also to recognise that maybe not everybody will deal with everything that's in the guide, depending on the size of their organisation. It helps you sort of navigate where you have gaps in your CPD or in your education professionally. Inevitably, when you go into some of the subjects like debt capital markets, one just goes into a huge amount of detail for the transaction, almost engages with it, and then disengages once the transaction is done, and then it's more of a question of managing the process going forward. But I think it's it's a really strong sort of document to put together. So it's good to see it out there, to be honest.
Thanks, Simon. And do you have a particular section that's a favourite or one that you'd recommend everyone read?
Well, you know, Caroline, I've read this from cover to cover probably 3 or 4 times now. No, but seriously, I think the strategic section is probably the most important. I know it kind of comes first in the guide, but I think unless you know what sort of policy framework and what risk framework you're going to be operating within to ensure that the board's appetite for risk is the same as, if you like, the CFO's and your own, it would make managing banks a lot easier if you do that up front. So I think it's for me it's very important, because I think if you don't know that, you can either lead banks on into transactions that you won't be able to deliver with the board, and you just waste a lot of time. So I think thinking through that quite clearly is really important. I mean, in my own role, this is an area we look at every year in a formal way with the audit committee. Me and my team will get together, in fact, I think later next month, and just turn the pages and make sure that we've not observed anything where this is either hampering our performance or indeed areas where we can augment our performance. So for me, it's a super important sort of section.
A very good point. And that being joined up, it's amazing how some organisations don't kind of join the dots and are heading in different directions. So absolutely critical, as you say. Frank, do you have a particular favourite?
I do have to admit I even have 2. One is a bit an obvious one, and the other one is a bit a cynical one. I'm starting with the obvious one. The obvious one is that where we are going into the new role and availability of technology. That is, of course, when I go back into where I started Treasury 20 years ago, that is a completely different exercise now. And with every hire we are doing in our department, with everything we are doing in our department, we still focus on technology, because otherwise we wouldn't be able to cope with all the requirements in that regard. And I would not only take it as a kind of there are broad availabilities. I think in Treasury in the last 5, 6, 7 years, we have a technology revolution, and not only broader possibilities. And the cynical one is the special insight about corporate failures. And the important thing is that you learn out of these failures, because otherwise you will lose your job. But it shows how sad examples, or it shows on these sad examples how important the role is really with Treasury, and why our profession has to keep eyes and mind wide open to be on the hood and to be on alert what is going on in your company. And that is also one thing, one very strong advice I would like to give. You have to understand your business. You have to keep the eyes on your business wide open. Because otherwise you're tapping into this corporate failure role, and getting another example of these sad things. They are reported in the next update for this 100 days.
Indeed, indeed. And yeah, absolutely, the Treasurer's role is so critical at the heart of the business, and really understanding it and doing one's job to the best of one's ability is really important. And you mentioned, and again, thank you both for your help with the guide and your excellent quotes and anecdotes. But you mentioned, Frank, you said, never say never to a scenario which tells you that the world is shutting down and any business comes to a nearly complete stop. Welcome to the COVID-19 world and the massive impacts Treasury leaders have to deal with. I just wondered if you'd like to expand on that a little more, Frank.
Well, if you look back into this guide, which I have at least as a printout in front of me, page 30 is starting with the cash flow forecasting, and it is written how this is done, how important that is, how technologies help you with this forward-looking discipline, and that the discussing of the cash flow forecast with your colleagues should talk ranges. The COVID-19 for us showed that we call it fat tail risks. So these ranges from a normal distribution are that what happened. We have a shutdown of 80% of the business in the whole world. And if that is not a fat tail, I don't know what a fat tail is. And in this regard, it is important that the company, the liquidity situation, the credit line situation is prepared to also cope with these fat tails, or to use a more scenario-driven world, to be able to survive if you can afford really the worst case scenario. And that is what tells us this and where we were so busy in the last months.
Absolutely, and you touched on something that I've, since my Unilever days, that I've been very much passionate about, is that looking at ranges rather than a single point forecast, which isn't terribly helpful. But as you say, then the normal probability curves don't necessarily play out in this kind of context. Excuse me, just turning to Simon, I particularly like when you talk about there being a high degree of core activity in Treasury, as there is in, say, FP&A or corporate accounting. But the difference, you say, is that you need to be prepared to have your day changed by real-time events that will generally require immediate or intraday actions. And you yourself, as a kind of accidental treasurer, so to speak, can you tell us more about that and a little bit more about the Treasury profession? And as I would put it, it's somewhat more forward and externally facing profession maybe than other roles within finance. But what are your views on that, Simon?
Yeah, I mean, I guess the biggest difference in many ways is what you typically do within a Treasury function has a real-time impact. It's not a situation where you can put a journal voucher through, if you like, because you booked something the wrong way around or you made a wrong assumption. It does have a real impact. I mean, what I suppose I mean is there's the big events, like always the call from the CFO about an M&A transaction that often comes with not a huge amount of notice. And then you have, as Frank was alluding to, COVID-19, where I think you are really testing the disciplines that you've hopefully already got in place running into something like that. But you're testing them in live show, if you like, which is important. And then there's the more sort of operational stuff, I would say, where you see sharp moves in FX, or you see a bad headline about a particular institution, or you have a rating agency that reacts to your set of numbers. Those type of aspects. I mean, COVID-19, I think, has tested everybody. So I won't go over that in any degree of detail. But what it did reinforce is the discipline of knowing who your contact points are, knowing how to get hold of them, knowing where your documents are, having them easily accessible, and then navigating through whatever you may need to do fairly quickly to reassure both the CFO and the CEO, because those are the last two guys you want on your neck at any time, but also the wider board, that people know what they're doing. And liquidity is sound, and you have a path to navigate through. One of the things I've certainly done in much of my career is what I'll call dry runs. So every year or so, we'll sort of try and sit down with one or two of the team and run through what might be a reasonable scenario, or 2 or 3 scenarios, and then to do the prep work, because these things, when they do come into live activity, you never get enough notice, you never have enough time, you're deluged with documentation, you're deluged with questions and board papers and all sorts of analysis. And therefore doing it relatively calmly, but with realistic scenarios that you can pressure test through your own team, through your own systems, is hugely beneficial. I mean, we did a bond in May of this year. We'd done quite a bit of preparation for that. It was something we were planning to do anyway before COVID, and COVID slightly delayed it, I would say. But also, we've done very large acquisitions in the past, and we've simulated those acquisitions, so that we know what we need to do when. And that to me is the thing that makes it most interesting. I mean, if you don't like a changing or an evolving environment, it's going to be a difficult environment probably to succeed at the highest level in. But if you like change and you're happy to deal with it, and you can keep a clear mind when things go wrong, that's hugely beneficial. I lived in Hong Kong through the Asian crisis, and we saw interest rates spike up at sort of 100% type levels. And until that moment, I didn't really recognize the importance of matching the dates up on swaps with other coupon payments on bonds. But of course, once you go through that, you certainly do recognize the importance of doing it. So I think that's a good thing, and I enjoy those type of challenges when they emerge.
Great. Well, there's a lot in there, a lot of great advice for people, particularly like doing these dry runs. And so for people who aren't as easily able to deal with change or don't like it as much, at least those dry runs, as you say, give you prepare you a little bit, and then when something does happen, you're in a much better position. So thanks for those pieces of advice, Simon. Now it's time to turn to Claudia, because you haven't had a chance to say much yet, Claudia. But you're working for Deutsche Bank, of course. You're also a Treasury professional through and through. What would you give in terms of advice to that person coming into Treasury for the first time at a senior level?
Well, I have 2 main recommendations. So the first one is look for a network. Look for your set of advisors that you can consult with and discuss new ideas. You will always find someone that is going through the same issues and can tell you the do's and don'ts, that can provide some assurance on whatever you are planning. I have seen that not many treasurers feel comfortable about approaching their service providers, their banks, system consultants. All of them, they have the experience on whatever you're looking for. They won't be always trying to sell you something, but they will be happy to make themselves available to you. They also know each other. So if they don't have the answer themselves, they can put you in the right direction. The Treasury community is very small, so everybody knows each other, even across borders. So try to find the right people you are comfortable talking to. My second advice is, again, technology. It's not only about knowing what is in the market. It is also understanding how a system gets implemented. What are the principles and the decisions you need to make from the beginning? Get familiar with the concepts on how data gets consolidated, how system talks to each other, how they are integrated. Ask your partners like banks what is available, how you can connect to them. Try to understand how you can make your function more efficient. Even if you are not planning to do the changes today, try to understand what's the way to go. You can start contributing to a smooth implementation by standardizing some processes even before you are ready to implement the technology. So try to get familiar with where you want to go and start working in that direction.
Well, thanks very much, Claudia. Great pieces of advice there as well, networking and technology. Just going to move back to our practicing treasurers at the moment, for want of a better expression, and just ask them if, and in the meantime, if questions come in from the audience, I'll be tackling them as well. But I'd just be curious to know if there's any kind of defining moment that you could describe, something that really affected you that you could share with our audience that might be helpful to them. And I'll start with you, Frank, on that one, please.
Well, one defining moment was already talked through before with the COVID-19 crisis. There is a second, I call it once a lifetime project, which was a spin-off from the former majority shareholder in 2018. Puma there was, or Kering, who was a majority shareholder before, has done a public offering or a distribution in kind, which led to a so-called change of control. And with this change of control, well, we do have to implement a complete new standalone financing policy, number one. We do have to find home for almost 3,000 FX derivatives, which are now no longer handled with the in-house bank of our former shareholder, but who do want to get to external banks. And then, as I'm also responsible for insurance function, we do have to rewrite each and any insurance contract newly. So that was really a defining moment. And you see the whole development of a Treasury department, well, in a quick view, within a couple of months, where you have to build everything new. By the way, as we talked before about people development, about how to get the people in, how to manage that, what was one really turning idea at that time was, because obviously for this big project, you can handle that either going to consultants or helping yourself. We chose the second version. So we brought in people from our subsidiaries outside Germany who wanted to learn a little bit more about headquarter Treasury, and we brought them in. At the end, we ended with one guy from Argentina and another guy from India, and we gave, at least for a limited time, a good chunk of the operational day-to-day business for which we are doing in Treasury to them, so that they can jump into this role. And I have done, and we have then pushed all the project works towards my teammates. And that was a very, very interesting time for us, because first of all, we had the help from the group. Secondly, these people who joined us have a complete different view of what we are doing there. And of course, it shows also quite trust to my people that we will manage that without expensive and extensive consultant inflow. And that was a very interesting idea, also from a perspective of career development and people development.
Well, thanks very much, Frank. That was absolutely fascinating. Thanks for sharing that. And Simon, any defining moment that you'd care to share?
Yeah, I mean, I shared a little bit about the Asia financial crisis. I was living in Hong Kong there at the time, and had been in post not particularly long. I think that was defining in the sense that the markets became so volatile so quickly that it is a little bit nerve-wracking. At that stage in your career, it is very nerve-wracking, and I think from my point of view, that led me to look at things going forward and think, okay, I should have done a little bit more thinking and a little more curious about how things might work in those events. But you learn from that. And I think the other one was RB. We made a fairly significant $20 billion acquisition probably 3 years ago now, where this kind of dry run preparation, we worked with an incredibly slim team at the centre. I think there was probably 4 or 5 of us working on the financing, me and sort of 1 or 2 others of my own team, plus a lawyer, plus an accountant, just working as a very close group, keeping together, making sure that we didn't have any gaps between our own knowledge. And we got a public leak during the negotiation phase of the transaction that meant everything had to be accelerated. And it's, again, you come back preparation, be curious, do your reading, do your preparation, keep up to date, so that you really do know what you need to do when these things come up. I mean, time and time again, whether it's COVID-19 or an acquisition or a material disposal, these things generally don't come with sort of 3 months notice. They come up on you incredibly quickly. And they are truly transformational for every company, some better than others.
Yeah, it's a fascinating point that you're coming back to again there, Simon, about this taking control, being prepared. So not just saying, well, we don't know what's going to happen, just take it as it comes, but actually being prepared, so important, and it will hold people in good stead through these difficult times as well, of course. So thanks very much for that. We've got some questions coming in from the audience, so I'm going to turn to those as well. And the first question I'm going to take was, do the panel have any practical tips for gaining a full understanding of their new business's strategy so that as the new treasurer, you can really plug into that? So would anyone care to have that? Simon, maybe start with you.
Yeah, sure. I think most companies, and certainly most public companies, the analyst presentations are increasingly taped, so they're available to look back. And I think it comes back to this thing about doing your homework in the same way that if you were going for an interview, you'd read the annual accounts and you maybe think of a few what you think are smart questions, although probably what are really dumb questions to the interviewer. But I think it's suck up what you can internally, try and understand the products, what's driving the products, try and understand the sort of financial metrics of it, but read and listen to the big picture stuff, whether it's newspaper articles or whether it's analyst reports, because everybody comes at things with a slightly different spin. And you need to know whether there are leverage issues that are on the horizon that you need to, you'll likely need to deal with quite quickly when you're in the job, or whether everything is relatively smooth but quite unstructured, and therefore you may have to do a bit of a reorganization or a re-implementation of systems and the such like. So I think read as widely as you can. And just keep up to date with what the banks are sending you. It may not be relevant today, but it sure as hell will be relevant in the future. So that you constantly keep almost like today. There's all manner of digital products that are being sold both by fintechs and obviously by banks, and some of them are white labeled and some of them aren't. And you just need to know what they are, because they all become relevant if only to dismiss them. But there's a right time and a wrong time to do some things.
Yeah. Thank you, Simon. Claudia, any comments on that question from yourself?
Yes, maybe on my experience as a former practitioner. So I found very important. I was working in an engineering company, and they were trying to explain me why they were using so many metals and commodities, etc. So we were trying to convince them to hedge. I didn't understand why it didn't make sense until I went there and saw a huge propeller for a ship, and understood what the technology was behind and why the commodities weren't as important as I was thinking. So go to talk to your business and understand what they are doing and why. And from the bank point of view, so we have visibility over what many industries are doing. So we know not only what your peers are doing, but what other industries that have similar problems have applied. So again, networking, talk to your banks, give us a call. We can try to find some answers for you.
Thanks, Claudia. And I'll also pose the same question to Frank before we go quick fire through some of the other questions, because they're all flooding in now. So Frank, your thoughts?
Well, what was a really eye-opening event for me was doing such a worst-case scenario together for the whole group with our head of controlling, and you should not come or you should not tend to do this scenario analysis by your own. So you should have someone who is doing that for you, but at the end of the day, you should be so deep into it that you could explain it as it would be your own one. Because this is triggering so many things, and you're really learning a lot of that. And that was one major insight. Even after 9 years, I'm already with the function. Even with this scenario analysis, I learned a lot.
Thanks, Frank. The next question I'll pose to you, as stay with you. It's what is your advice on interactions with rating agencies? How often should you meet with them, maintain relationships outside a debt raising or other transaction?
I have to admit we don't have an external rating, so I'm not a good advisor on that.
Yeah, so we'll move then to Simon. It's just I've got a couple of special questions for Simon as well, but I think Simon, we're going to have to focus on you for a little while now.
Let me deal with the rating agencies one. So I think how you deal with them is, in a not dissimilar way to how you would deal with your bankers. I mean, you have to manage expectations carefully. You have to be transparent, and you have to, as Frank says, you have to know your numbers, and you have to own the numbers. How often you meet them, to be honest with you, depends where your rating is. For us, we tend to meet them formally once or twice a year and have a dialogue with them as and when something relevant comes up, and we would share that with them, obviously.
Thanks, Simon. And there is, as I say, there's a specific question for you, Simon. How did you prepare for the M&A activity? What was crucial in ensuring day-to-day post-deal close?
So how we prepared, we had a corporate model. So the corporate model, we kind of simulated what it might look like going through the corporate model. All the DCM and loan presentations that we may have received during the preceding 6 months and transactions we'd observed in the market, we effectively created a pricing grid through which to negotiate the bridge facility. And then we went to the capital market. So I think we knew the markets very well. We knew people that had done similar sized deals. We'd had them pitched to us over the preceding 6 or 12 months. And we do keep this stuff and we do read it. And putting it all together, that effectively enabled us a sort of a sheet to work through. The integration, there's a time and a place when you start the integration, and when you're buying something that's already got a treasury function, everybody knows that function isn't going to exist for a great deal of time after the acquisition. So myself and one of my colleagues kind of got on a plane basically, and we went through it with the team and had a very transparent dialogue, and it worked well. Mm-hmm.
Thank you. Now, we have one question that's this individual is saying it's key to understand the business as much as possible. Should a proportion of the 100 days be dedicated to understanding the business as much as possible? And I think we have said it, absolutely. And another question coming in, though, then says, does the boss agree you take the time to do all the horizon scanning and keeping up to date? So I just wondered what you might say on that, Simon, before we move over for Frank's view.
I probably have a fairly blunt response in many ways to that. I mean, I do take the view that there are 24 hours in a day and there are 7 days in a week, and generally most people are working for 5 days a week and 12 hours. So I think it's there's an awful lot of stuff you can do around that, and you have to do a lot more in your own time as you go up to prepare yourself. Does my boss think it's a good use of my time? Well, hell yes, because there is no shortage of people trying to benchmark or reference check what you do once you've done it. So you want to be really sure going into it that you've got the best deal you can for the company. And we take a lot of pride in that. It has to be a fair transaction, but you do need to know the market. And we've gone through that a few times. And I think that investment in time, and most of it is, I will accept a lot of our own time, is really well worth it. And I think it's good career progression. I think it's good, professional development, and it gets you closer to your banks. And that's, those are all good things.
Absolutely. Thanks, Simon. Frank, this question is, any tips for those stepping up internally, deputy to group treasurer, e.g. change in behaviour when dealing direct with the CFO? What would you say to that, Frank?
Well, it's a funny one because in my previous role with my previous company, I have done exactly this, stepping up from a deputy position into a group treasurer's position. I think the more interesting, thing to manage is more how do you deal with your former teammates. Your CFO had a good word in letting you step up. So why should you talk to him very much differently that you have talked before? And of course, there is one thing where you should always be aware of. Being a group treasurer, the CFO is not only asking asking about functional specifics. Being a group treasurer, he seeks your advice. So you have to step up into this strategic role and have to check with the CFO, how much do you want me to get into this strategic role? That is maybe the only change towards your superior, your CFO. And that is, of course, something which you have to address, because that is a normal expectation everybody could have from a group treasurer. But it is more interesting also how you deal with your teammates before. That there you have to be quite careful in that regard, and then it will work.
Indeed. Thanks, Frank. And Claudia, you've seen a lot of what works and doesn't work in the Treasury world. Do you have any comments on this particular point?
Regarding the treasurer, the deputy treasurer stepping up, I think something that you need to acknowledge is you will feel uncomfortable at the beginning, but then it will come natural, right? So it's just practice.
Yeah, no, it's an interesting one. And as a former musician, I always say, practice, practice, practice. There's a great book by Herminia Ibarra, Act Like a Leader, Think Like a Leader. And sometimes you just have to act, you sometimes just have to do, and then you become. Now, I know we're nearing the end. We're just running over a few minutes because we started slightly late. And there's quite a number of questions coming in, but we've got time just for this last one before we close off. And this one says, what is the best approach you've come across to be fair on share of wallet and managed bank relationships? So perhaps I could turn to Simon to take that one, please.
Thanks very much, Caroline. That's very good of you. I think you have to recognise, if you've got a core group of banks, you have to try and allocate the wallet as fairly as you practically can, recognising that many banks can't do everything. So there is always a bit of a skew in that. But you have to be fair. You have to listen. We sit down with our banking group formally once a year to go through the state of play, if you like, on the relationship, what's gone well, what's gone badly, what their return is. And the banks that we deal with, we will have a very open and transparent conversation. We can't please everybody all the time. I mean, that is just the reality of life. And both sides of the table know that. And no matter how much you give, people will always want more. So it is a question of balance, to be very candid, but also trying to accommodate and help people where you can, because everybody's trying to do a job here, and we both have completely aligned goals. We just have different taskmasters. So to try and get that balance is, you've got to know first of all how much you actually think they're making off the relationship before you can really have a sensible dialogue. So we do our own share of wallet calculation, and we ascribe values to certain things, and we try and match it up with 2 or 3 of our banks where we have large flow business to make sure we're directionally there. But no, it's transparency and trying to share the opportunities. It's not easy, to be candid, but it's part of the job.
Well, thanks very much, Simon, for that. Very, very helpful. And I'm sorry we don't have time to cover all the questions today. But Simon, your 15-second last piece of advice, a word that you'd like to share with the audience, please.
Yeah, I think, obviously, read the book. Read the guide, I suppose, is the first thing. Look after your, be curious, read as widely as you can. And I think we've all said pretty much the same thing in different ways. Take all the information you possibly can, and sift out what you can't use today and use what you can, and have a view. Try and develop a view.
Thanks very much, Simon. Frank, your final words.
Well, it goes into the same direction. One thing which is very, very important for us here is be super strategic, consistent, and transparent on your approach you're doing towards your partners. Is it banks? Is it fintechs? Is it whoever. So be transparent and communicate. And that is how you manage that to the best of your internal partners, but also your external partners. And read the book.
Absolutely, and communication is so key. We focus on that a lot in our qualifications and other areas of the ACT, because if you can't communicate, then you might as well not have bothered, really, if people don't understand what you have to say. Claudia, your final words.
Maybe with regards to communication. So sometimes we also need to listen to you. So most of the time we come with a lot of information, what's there, but sometimes you should also educate us and let us understand your needs, your business, so that we can offer the right products, the right advice. So talk to us more. Let us prepare for the meetings by providing more information that would be that would enrich the communication in all the meetings.
Thanks very much, Claudia. So we're going to close in just a few moments, but just I'd like to thank my three panelists very much for today. It's been a great pleasure, and I've learned a lot as well. And thanks also again to Deutsche Bank for supporting us on this project. And I hope you'll agree that the look and feel of the document is absolutely fabulous. Just before we go, don't forget to fill out feedback on the webinar. Also, if you'd like to, if you haven't yet registered, we have our upcoming annual conference next week, so I hope you will be able to join us there. A fantastic platform, and we hope to be able to encourage networking, get people just away from the grind and the day-to-day. I know it's another virtual event, but really we need to communicate with each other. So there's some great networking possibilities on this platform, so do join us for that. We've also got the Middle East Treasury Summit and Awards coming up. I know a lot of you on the call are based out of the Middle East, so please do look at joining us there. And we've got other upcoming events, as you can see here. So without further ado, thank you so much. And also, if you're interested more about communication and the softer skills, do look at our Strategic Insights podcast, where every week I, from my coaching background, share a few words of things that you can implement tomorrow that will maybe, will hopefully make a change to your career and your life. But thank you all very much for joining us today. And it's goodbye from ACT Cyberspace, and we hope to see you again soon.